All right, yesterday, your next guest did not move the market, but his report helped move the market. Busch of Genscape joining us now exclusively here on CNBC. Brian, you guys track data points. You track storage better than anybody else out there.
Yes.
What you wrote yesterday did alter the price of oil. Where are we in America with oil supply and storage?
Well, so supply-wise, it's not just America, it's globally. We are oversupplied with crude production right now, given what the world demand is. Until the economy picks up, it's going to continue. But we are at all-time record highs. We have over 100 million barrels of storage in tanks above where we were this time last year.
100 million more.
100 million more than where we were this point last year. And we're 100 million more above where we were on a 5-year average. We've never been up here.
So where are we in total? Because I think the concern of a lot of people is this. If storage gets filled up, then the marginal price that I'm going to get for that barrel of oil that can't be stored is zero. It has no value. Are we near the risking point of oil being filled with storage?
No. We've still got storage available. In fact, in the U.S., we may have more free available storage than almost any place else. Cushing still has a little bit of room, but we've got about 55 million barrels just along the U.S. Gulf Coast storage space, and of that, probably 30,000 is operational available for storage. So we're not about ready to spill crude on the ground, but if the overproduction globally continues, at some point we might reach that. We came very close to that back in the late 90s, early 80s when we saw what we all called hyper-contango.
Is there anything that you look at that gives an indication, Brian, that supply and demand, good old supply and demand, will come back into balance anytime soon?
Right now, I don't see it. I don't see anything on the horizon that makes me believe economics are going to pick up in China or Europe. And I certainly don't see anything that makes me think that OPEC is going to blink or the Russians are going to cut back. I think we'll see maybe another 800,000 barrels a day of decline in U.S. production because we operate on market economics.
Okay.
So when the market's down, we pull back a little bit. It's going to be mostly the tight oil plays, but that's not going to be enough to completely outstrip the overproduction, especially when you consider new production coming on in Brazil, Iran coming on, and the possibility of Libya stabilizing.
All right, a lot of stuff coming online. Storage, though, still a little room. Busch.